if you had saved $1 million 25 years ago and bought treasuries, you had 70 grand a year in income. Now you need $10 million to get $70,000 in income off treasuries, and 70 grand is going to do very little for you. I mean, you'll be playing golf at the cheapest municipal golf course in the area, and you won't even be doing it that often. Okay, so my point is that the standard of living has been under attack. And so free markets would allow you the opportunity to position yourself, and there would be corrections in these things. There would be, this system rights itself like a forest fire, clears out the bottom undergrowth in the forest. We don't have that anymore. That stopped about 20 years ago. As this goes, people are going to slowly realize that, like I was saying about saving up, $10 million to earn 70 grand in interest, it's totally impossible. I mean, how would my grandfather today tell me, just get a job and save? I mean, who can save $10 million just working? So you have to speculate. So it's going to turn everyone into a speculator. Now, gold has not seen that speculative mania yet, and that's coming. That's ahead of us still. That's why we had the $2,500 gold target for this year, which I want to revisit that with you. Our target for the end of the year is $2,500. Now, we're not saying gold will finish over that. We're saying gold will touch that by the end of the year. It's a very important distinction. We think silver hits 40. Think about that. That's a 62.5 to 1 ratio, which is about the historic average. $2,500 gold and $40 silver. These markets haven't become speculative yet. They're just now starting to see serious cash flow. Berkshire Hathaway. Now, I don't know if you know this, but an ounce of gold on January 1st of 2000, and you bought the equivalent number of dollars worth of Berkshire Hathaway, gold outperformed Berkshire Hathaway. It outperformed Berkshire Hathaway stock. So Buffett doesn't pay a dividend. Gold doesn't pay a dividend. Okay? You can look at these things fairly equally. And if you just bought physical gold, you outperformed the world's most famous investor. And now he's buying Barrick Gold. Why is he buying Barrick Gold? Because the operating margin is twice Microsoft, because the dividend yield is higher than Microsoft, because the company's fundamentals and metrics are far superior to the other companies in the market that have been levitated. He's on to something. Silver's got some catching up to do. One of the things about silver that people need to understand is that the supply of silver is not elastic. And what that means is, as the price goes higher, the mines can't just turn it on. I mean, only about a quarter of the silver supply comes from actual direct silver mining. The rest of it comes from byproducts and recycling and all these different things. So if a company's mining copper and they produce a little bit of silver and the silver price goes up, they can't just turn on more silver production. Now, gold, can do that. Silver can't. So silver has a little bit of catching up to do. Now, one important thing to remind everyone, if you look back over 25 years, and goldsilver.com just did a great article on this, they looked at the months of the year where gold outperforms. Almost all of gold's performance has come between September and December every year going back. This is an average, okay? Of course, there's been years where maybe it didn't, but September to December is the bulk of the move in gold. I mean, you can say, well, why? We need to know exactly why that is. It might just be because people come back from the Hamptons on Labor Day weekend and they say, something doesn't look right. So it seems to be this time of year when people start gathering up supplies for the winter. And so I don't want to look too deeply into that, but I want to say, look, this is the time of year when it moves. And also what's going to happen early November? You have an election that people are already contesting the election and there hasn't even been a vote yet. So you have, the perfect storm for 2,500.